Good afternoon, everybody. This is Hunter Mozingo bringing you your daily market insight video here on Thursday, January 6th, a little over 5 minutes after market close in Jacksonville, Florida, 4:06 p.m. Eastern time here. And today we saw further weakness in the S&P and the Qs. Really, it was just a very choppy, volatile session in general. But the key focus here in today's video is a list of stocks showing relative strength, stocks that are starting to look a little bit more attractive, forming new leadership in new sectors, and I'm going to bring all that to you here in just a moment. But let's talk about what we always talk about here, because we've got a change to this market state, we've got some changes to the trend gauge, and I want to get into that. But first, what just happened? Like I said, very choppy session. You can see the S&P and the Qs just slightly down. We saw banks and oils lead today, continuation from those sectors, actually some nice breakouts in those sectors. Performance-wise, the G5 was basically flat. We actually saw ARKK try to bounce after initially being weak this morning. A lot of growth stocks, beaten up high beta stocks trying to bounce after a really ugly open this morning. The S&P down 0.1%, Qs about the same, Dow down about 0.5%, mid caps and small caps both up about 0.5%. Small caps, no doubt, getting a big boost from oils and banks, like I said. So that is the performance for the day, but really, I don't think it sums it up. Like I said, very choppy action. We saw the Qs gap down this morning, about a 1% move down, ultimately come back up and then finish negative for the day. So we'll look at the charts, but just to give you an idea, it was a little bit wild in regards to the volatility today, particularly on the indices. Market state now consolidation, and I'm going to add this here for when I put it on there, just so I've got the this on here with it. So consolidation 1.6. Don had it an uptrend on Tuesday's video, but we've gotten some nasty moves down on the IWM, two closes below the 50 and the 21 on the Qs. Mid caps trying to hold on to their moving averages, so we've changed that to consolidation. We do have the Dow and the S&P still looking moderately okay. So if those two end up breaking down further, that will be changing from consolidation most likely to correction. Now on to the trend gauge. We did add a small red arrow here on market leaders as we've seen some of the names that were holding up really well begin to break down. Just to name a few: Apple, Microsoft, Google, Nvidia, AMD. Those were some of the big liquid leaders that were propping the indices up and the market up going into the fourth quarter. Or the end of the fourth quarter. We've seen that some of those have very weak opens to the year, some moving averages crossing down below each other, so some not great action in some of the former market leaders. But like I said, we are seeing some new leadership emerge in some other sectors, and we're going to look at those charts. Short term has been moved to neutral. We have two closes below the 50 and 21 on the Qs. We're slightly below the 21 on the S&P. IWM has hooked back down below all its major moving averages. So we've got short-term to neutral with a little red arrow here pointing towards bearish, because that could change very quickly depending on how the S&P and the Dow behave for the rest of the week. So they're really the saving grace that this isn't in bearish right now. Medium term also moved to neutral. Like I said, the Qs two closes below the 50, IWM back below the 50. Mid caps more or less right on it, and the S&P basically bounced off the 50 today. So we've got the medium term here, neutral. This is not a red arrow yet, but if the S&P breaks below that 50, breaks today's lows, this will most likely be moving towards that red arrow, particularly if we get some closes below the 50 on the S&P. Long term remains intact. The S&P, the Qs, Dow, mid caps all above the 200. Only one below is IWM, which is the reason for this small yellow arrow here. So before we get to the charts, as I always do, let's talk about Revere very quickly here. This is the team. That is me. If you have any questions, please send me an email. I would be happy to answer them. If you're concerned or interested in what we do, or want to know more about what we do and what our approach is, you can email me, Dan, Tim, Merrill, Alex, or Don at revereasset.com. So let's get into the charts, and I've got a little sneak peek maybe of one of those names showing RS on the screen here for you. But let's go to the S&P first here, SPY. As you can see, like I said, bouncing off of the 50 here. The low of the day on the SPY is going to be roughly 465.50, but bouncing off the 50, but not able to get above the 21. We will see what happens tomorrow. But what I'm looking at is, for one, can we clear today's highs from a bullish standpoint? And for two, can we clear these old highs here, this previous resistance, this 473 area? So that would be an area I would watch to see if that turns into resistance now, as well as kind of the way the 470 level operated as resistance on the S&P. Conversely, to the downside, I would be watching today's lows. Obviously, those are going to become very important on all of the major indices as well as a lot of stocks. So keep that in mind. Today's lows now become very important. If that gets broken, that clearly means that the S&P has now broke the 50-day moving average as well. So something to watch there. Watch today's lows, kind of the 4660 level on the actual S&P index, roughly the 465 level here on SPY. QQQ, same story, very big support level here at 380, which is where we bounced. If we take that out, that is not a very good sign. You can see today we tried to rallied up to roughly 387, 388, didn't get much further. So not a ton of strength on these bounces is what the way I'm perceiving some of this. Now, granted, these could have another move higher tomorrow, but what's really going to be the big test is how these act into these overhead moving averages that are now possibly going to act as resistance, or how they act into these overhead levels on the Qs, for example, like 390. Those are going to be the kind of things we're watching for to the upside. And then to the downside, like we said, we're looking at 380 as the low pretty much today on QQQ. And then below that, we're watching these lows, 378.90, 377.47. You take out that 377.47, might not be so great for the Qs there. Let's go to mid caps here. As I said, basically right in the middle of the moving average. You can see the 21, 8, and the 50 more or less all right exactly where it's sitting at. Not the greatest look unless it quickly reclaims them here. So mid caps trying to hang on to the moving averages, but a nasty candle yesterday, like we saw with everything else. We'll see really how the end of the week plays out is going to be very important on these, as well as what happens at the start of next week. But for the time being, just kind of sitting on a precipice here at this cluster of moving averages. Next level of support is really this 500 area and this 200-day moving average, which is pretty close to that 500 area as well. Once again, you want to watch these previous lows as well as the low of today on all of the indices. IWM is going to be the same story, right? Looks very similar to the mid caps with the exception that it's below all the major moving averages, not up in the middle of them. We're going to look at the same thing here, a low of 215, roughly 216 on IWM. You want to watch those levels. Pretty clear horizontal level here, lots of lows going back into this base, and then the lows of the base itself, roughly 205 to 208. So that's the big area to watch to the downside. To the upside, it's the same as the others. We want to see above today's high and then back and see how we act up into these declining moving averages. And lastly, on the indices here, DIA, the Dow, the sole stander above the 21 EMA from the major indices. As you can see, three bad candles really closing at the bottom of the range 3 days in a row, but holding on to this 360 level, holding on above the 21. That's really the key level I'm watching, is if the DIA has a harsh break below 360, that wouldn't be a great sign in my opinion, as well as these previous lows. I know that's a good bit below, but that's what you want to be watching, as well as the recent lows here. And this 360 level, as you can see, very important. 355 is going to correspond with really kind of the 50-day, as well as these previous highs. So something to watch there, that 360, 355 area on the Dow. So before we get into the charts of actual stocks, I do want to take a quick stop here on TLT and highlight that we have seen TLT kind of fall off a cliff. I know we've talked about it, but we did get a reversal today. TLT coming back and closing to the upside of the daily range. And conversely, that means that TNX, or the 10-year yield, is going to close near the bottom of the range. And that is what we saw. Not exactly reflected perfectly here in the charts, but we did see TNX, or the 10-year yield, back a little bit off of that 1.75 area. As you can see here, we're at the top of this range basically for the last year or so on TNX. So a pretty pivotal spot here for TLT and TNX, something to watch as we move forward, watch how it develops. if this continues to operate as resistance here on the 10-year yield, if you see TLT start to climb higher and conversely yields fall lower, it is something to monitor. We've been monitoring, as Don covered it in his last video. So let's go through a few trades we made today. We actually took profits on all our remaining individual stocks. The first being DVN, an oil stock that had a really nice move. We took profits here, sold the remainder of that position. Same story with Micron. We took Micron off the board, if I can get it to cooperate there. Took this one off the board as well, just taking some profits as the market was continuing to act unhealthy today in a lot of ways. And then lastly, took Apple off the board as well, as it broke below the 21 for the first time since the breakout, going all the way back to November here. So we only have SSO now in protection, about a 33% position, which is equivalent to roughly 65% exposure to the S&P 500. So that's where we sit. We're not really interested in being in many individual stocks, as the market has not been very trustworthy. But let's highlight some of the relative strength for today, and then let's look at some of these key sectors and stocks that are really holding up well and showing relative strength. So Facebook, the standout in big tech, although this is not a great looking chart, it was showing big RS today, up 2.5% or so, trying to get back above these major moving averages, but not quite able to do it. So nonetheless, it is a standout in RS, particularly among the mega tech stocks. But the real strength is in oils, XOP, the oil and gas exploration ETF. You can see up 3% today. This is still a good looking chart. And banks, particularly regional banks. This is where the strength is. Look at that breakout there on KRE. So the caveat is, over the last 2 or 3 days, we've seen a lot of these oils and the banks get very extended to the upside. So we're going to look at a few of those here as we go through these, and I want to go through these as some of the leaders in these space. So first, let's start with banks. SBNY, Signature Bank. This is one we've had on the 21/21 at times, but a beautiful breakout here. Not massive volume by any means, but price is really what matters. And you can see this is a beautiful, strong move, pulled back in, tucked in here to test the moving averages a little bit, and then off to the races. And we've got a similar look here on FITB, Fifth Third Bank, and you can see just a really strong move out past this 45 level roughly. So we're seeing a lot of banks that have pretty similar charts to the two that I just showed you. So KRE, one of the strongest areas in the market, Signature Bank and Fifth Third Bancorp, two of the better looking ones in that group. From an oil perspective, DVN, we've talked about this one. You can check out the fundamentals on the screen here. Pretty monstrous, and really DVN and FANG are the top tier stocks of the oil and gas exploration. There are some other ones that are pretty good, that are much less liquid, but they're also more volatile, and these are pretty volatile as it is. So FANG and DVN, two of the top ones at the list. Some of the more stable names in the XLE type of ETF, you can see this is a straight up move from XOM, that's ExxonMobil, really going more or less in a vertical fashion over the last 4 days. And then CVX is going to be Chevron, which has been a leader in the space, and it's just continuing higher as well. So there's 4 solid names in the oil space, 4 of the best names in my opinion. And now I want to talk about a new area that's actually starting to come back to life, and that is industrials, right? So we've seen John Deere make a big move up over those key moving averages and some of this resistance this week, up, I guess that's close to 10% here, as you can see, from about 340 up to 375, 380. So John Deere making a strong move and starting to repair the chart, getting back above these moving averages. Hopefully we'll start to see these hook up and get back in the right order. Additionally, Caterpillar, although I don't think it looks as good as John Deere, doing something very similar. And this isn't an industrial play per se, not in the same way that Caterpillar and Deere are, but we're seeing Ford and some of these automakers like Toyota, even GM, but really Ford is the clear leader here, show some big time strength. So the industrials, the oil and gas, and the banks are where we're seeing strength in this market. And we're also seeing some of these low PE, cheap semiconductor companies hold up well. So, or just technology in general, the ones that have great cash flow, possibly even have a dividend yield, that don't have absurd valuations like Micron, for example, or even Lam Research. We've seen these semiconductor equipment stocks hold up pretty well over the last couple of days. Applied Materials as well. I mean, hanging in there above the 21. And QCOM, another low PE, cheaper big tech name, but that's where the money seems to be flowing to, out of these higher beta, higher valuation companies, more so into these lower valuation, cheaper companies, for lack of a better term. So I feel like, between Micron, Lam Research, Applied Materials, Qualcomm, Ford, John Deere, Caterpillar, DVN, Fang, Exxon, Chevron, Signature Bank, and Fifth Third, that is a great starting watch list to see if their leadership can continue. Now let's get to what's weak and what had a bad day. Crypto broke some significant support yesterday into last night. Bitcoin broke below 45,000, and that is really important. That had been kind of a line in the sand, a level where it was trying to stake out a low and climb higher. Undercut that. We saw a lot of the crypto related stocks and miners get hit today. So crypto having a tough day. Gold and silver unable to catch a break. GDX, gold miners, as you can see, down pretty big today, 3.5%. We saw home builders have a tough day today, again, down 1.1% roughly, one of the worst performing sectors of the day. Uranium, which had recently had a big move up, just a pretty nasty 2 days here. As you can see, this is an ETF that was one of the leading sectors. You can see it's pretty volatile, not an easy trade, but it had made a pretty strong move back up over the 21, nasty reversal back down. A few more here, and I'm going to be quick through these. Netflix, one of the big laggards in the tech space today, breaking the 200, down almost 3%. Nucor, STLD, FCX, these names had strong days yesterday, poor days today, down 5% here on Nucor, excuse me. STLD, pretty similar looking chart pattern to some degree. NUE looks a little better in my opinion, but same story, down 3% today. And then FCX, which was looking pretty good, breaking back below the 8, testing the 21 and this 40 level, down 3% today. So, which additionally, XME was one of the worst performing sectors of the day as well. So XME, ITB having a tough day in sector land. And then some of the high beta growth stuff still really not able to catch a break. Upstart down another 3 or 4% here, as you can see. Trade Desk, TTD, one we actually owned recently, and this is why you have stops in place, down another 3.5% today, back to the 200 day. And then lastly here, Nextera Energy, which has been a safe haven and a leader of the utility space, XLU, as you can see here, this was a pretty big run for Nextera, fallen off a cliff over the last 2 or 3 days here, just a nasty day. And you can look at the chart. Nextera doesn't have many candles that are this long or look this wide, and that is because Nextera is typically not a super volatile stock. So a really nasty day, especially when you take into consideration the ATR and the normal volatility and trading range of this specific stock itself. So that wraps it up for today. I hope I gave you guys a good starting point with some of these oils, banks, industrials, and some of the cheaper semi stocks that are hanging in there. But once again, the market is not acting the best. There's a good chance that these can end up being maybe the piano players or the last men standing. We'll see how it plays out. But for the time being, price is telling us that these are acting like leaders, while technology and high beta growth is getting sold off really hard. So that's it for the video today, everybody. I hope you enjoyed it. Please email me if you have any questions. If not, I will see you on the podcast. And I also have tomorrow's video, so I'll see you tomorrow as well. Thanks, everybody. Have a good one.